Hey, what's up guys? John here. Home builder confidence is plummeting. The housing market, the real estate market, people are getting very nervous. There's a lot of reservations happening, especially in Airbnb, house flipping, even value add multifamily. We're seeing a lot of people wonder, hey, what's going to happen next? We're seeing oil prices pull back. And with that, people are starting to wonder, are we going to start to see further declines in oil prices or higher increases? This will all have a massive impact on tourism, which indirectly impacts Airbnb and travel. I believe we're going to see a lot more uncertainty in the next 3 to 6 to 12 months, not just in the housing market, but overall, the overall economy. We're going to likely see Jerome Powell continue to increase interest rates, at least in the short term, and that could be followed by quantitative easing, further stimulus, further cash injections into the economy, all of which will have a really big impact on real estate. So the big question is, does it make more sense to sit on the sidelines right now if you're a home buyer, or to sell now if you're a home seller? Well, that's what I'm going to talk about right now. Home builder sentiment plunges in July as buyers pull back. Confidence among builders in the nation's single-family housing market fell in July to the lowest level since the start of the pandemic. The National Association of Home Builders Wells Fargo Home Market Index, a survey designed to gauge market conditions, found builder sentiment dropped 12 points to 55. That marked the largest single month drop in the survey's 37-year history, with the exception of April 2020, when the reading plummeted 42 points to 30 after the start of the pandemic. Any ratings above 50 on the index is still considered positive, but sentiment has now fallen 24 points since March, when mortgage rates began moving higher. The average rate on a 30-year fixed rate has nearly doubled since January and is now hovering around 6%. That could all very well change in the next week and a half, as Jerome Powell is scheduled to give his guidance on interest rates. We're hearing numbers as high as 75 basis points to 100 basis points. This will have a really big impact on the housing market and a really big impact on buyers' affordability. Sentiment stood at 80 in July, as last year, after hitting a record high of 90 in November 2020, when the pandemic sparked a rash of home buying among people looking for more space in a less urban area. Now concerns about inflation and recessions are among the factors taking a toll on builder sentiment. Of the index, 3 components: builder sentiment about current sales condition dropped 12 points to 64, while sales expectations for the next 6 months fell 11 points to 50, and sentiment about buyer traffic declined 11 points to 37. That's the last component, is now solidifying a negative territory. Affordability is the greatest challenge facing the housing market, said Robert Dietz, NAHB's chief economist. Significant segments of home buyers' population are priced out of the market. Some major publicly traded home builders are addressing affordability in their latest earnings release, saying that they would work with buyers to accommodate tightening budgets, but the price of newly built homes in May was $449,000, up 15% from a year ago. And one of America's largest home builders, Lennar Home Builders, they're now moving to a build-to-rent model. So we're going to see a lot of these builders that have the deep pockets start to move into this type of model. If they can't get the price that they want, they're going to start doing build-to-rent, and it's just going to become much more of a renting friendly environment. Over the next sign of softening markets, 13% of builders in the HMI survey reported reducing home prices in the past month to bolster sales or limit cancellations, according to Jerry Cotner, NAHB's chairman and home builder in Savannah, Georgia. Production bottlenecks, raising home building costs, and high inflation are causing many builders to halt construction because the cost of land, construction, and financing exceeds the market value of the home. In the Northeast, builder sentiment on a 3-month moving average fell 6 points to 6.5. In the Midwest, sentiment dropped 4 points to 52, and sentiment in the South fell 8 points to 70. The West saw the largest decline, falling 12 points to 62. Now, there's many things hitting the housing market. One is that we are starting to see these supply chain problems really start to pick up. We're seeing higher wages being demanded from home builders. So builders are paying more for land, they're paying more for wages, they have more delays with getting materials, Interest rates are rising, all of which is impacting a buyer's affordability to qualify to buy this property. So home builders are getting hit from every single direction. Am I saying it's a horrible time to buy a house? I think there's been better times, sure, but I think that there's always opportunities to buy in all markets. It's just in this market, it's going to really come down to you being a smart, sophisticated, savvy buyer and making sure that you're buying something that has real margin, meaning if the market falls 10, 15, 20, or 30%, you still won't be underwater. Now, generally, you're not going to buy that type of deal from a home builder. Home builders are going to be selling properties that are completely done, and they're going to sell it for the market value, meaning the only way you're going to make money on that deal is if the market continues to appreciate. You normally will make money on those types of deals that I just mentioned if the property is older, beat up, probably in a better area, and there's a lot of other homes in that area that are, well taken care of. It's a really prime area. Maybe you just buy something a little dilapidated and you could fix it up for cheap. That could be a value add, right? You just have to be very smart and very strategic with how you invest. I personally think that home builders, they're going to get hit very hard over the short term. And I think we're going to start to see a lot of people that can even afford to buy that brand new house say, you know what, my job isn't as stable, the cost of living is much more expensive, I just can't, it doesn't make sense, I can't do it. I'm just going to buy something and I'm going to fix it up myself over time. So we're going to see some really big changes in the housing market, the real estate market. I think that some price points that are going to hold up better than others are going to be between that $250,000 to $400,000 price point. That's going to hold up better than say the $700,000 and above price point, mainly because what's going to happen at the $200,000 to $400,000 price point is you're going to start to see a lot of people that are renting. Average rent now in America is over $2,000. Say, you know what? For $2,000, I can move into this area and I can own something, and my costs will be fixed. Whereas last year, the average national rent went up 18%, over 18%, 18.5% as a national median average. So what does this mean? If you buy a property on a 30-year fixed rate and you could buy it knowing that you're not going to have any more rent increases, that's a benefit. And I think we're going to see a lot of investors, Wall Street funds, hedge funds going after these properties as the market changes, simply because there's going to be upward demand for these single family rentals. So we're going to see a lot of changes in the housing market. With change comes opportunity. Now is the time to really make sure that you have great credit. I mean 720, 740 and above to make sure you get the best mortgage rate. If you need help fixing your credit, cashnow.video. That's cashnow.video. I have a team of incredible credit repair specialists in-house. If you want to know how to invest in real estate, what to buy, cashnow.video. And if you want to get on the YouTube grind with me, cashnow.video. If you also want to join me on my second channel, it's going to be an interactive call-in show this upcoming week. It's pinned down below in the top comment, so be sure to check that out. And then LinkedIn, Twitter, Instagram, and TikTok up in the banner. What are your thoughts about this? Do you think we're going to see a pullback in the housing market in the short term? Let's say the next 3 months, the next 6 months. Are we going to see more and more home builders get shaken out? Are we going to see interest rates rise? And are we going to see more buyers pushed on the sidelines, waiting and wondering what's going to happen next? Drop your comments. Let's talk about it, and I'll catch you in the next video. If you're interested in being sponsored on my YouTube channel, visit cashnow.video/sponsor and fill out the application.